Hi, Justin Dye with Schwazze. Glad to be here with you. We are the leading vertically integrated cannabis company in Colorado with a new named acquisition to move into New Mexico, as well as we continue to grow into a regional operating company.
Justin, good to see you, sir. Good to see you. We caught up with you previously, and we talked about business plans, strategies, team, etc. Just wanted to catch up with you before the end of the year, because you've gone and raised a chunk of change, $95 million. Intrigued as to why now and how you plan to deploy that efficiently. So maybe start with it. Why now?
Yeah. So why now? We've continued to work in Colorado. We have a number of great growth opportunities, organic and inorganic acquisitions, such as the 2 Emerald Field stores. We also are buying a location in one of the best corners in the state of Colorado. And that is the smoking gun asset, which we're going to remodel, et cetera. So there's capital required to continue to grow the business and for us to continue to effectuate our business plan. We've also announced that we are buying our Greenleaf, and there are a number of companies underneath that business that give us a really terrific business in New Mexico. It's one of the, if not the leading vertically integrated cannabis operators in New Mexico. So the capital will be used to fund acquisitions. $95 million was the raise, and we'll deploy about 2/3 of that for the current acquisitions that we have that will be closing. Team's going to be busy between now and the end of the year and early into the new year, getting all these acquisitions closed, which we're excited about. But also gives us some dry powder to have on the balance sheet for future acquisitions that we're working on the pipeline, and allows us to remodel stores and make sure we've got a great asset at the store level to attract consumers. And so we're going to continue to fund our internal growth with that capital. Now we have $21 million of cash on the balance sheet already, so we'll add to that. So probably, over time, we'll deploy this over the next 2022. But we're sitting in a great cash position. We've got lots of flexibility to do what we want to do.
So the word that I went away thinking about when we spoke last time was efficiency, in terms of using data to make sure that you are spending your money, smartly, right? You're being efficient. This time around, it's I want to talk specifically about your strategy, because you're in Colorado, now you're in New Mexico. How are you going to roll and build this out? Because some companies that we talk to, they are more about taking part. They just want to be there. If you're in the game, you're in the game, but you want to win. So what's the difference between these acquisitions that you make and the way that you're making, the order of play, than say, some of the other people out there trying to do the same thing?
Yeah, no, we have a clear strategy on what we want to do. We want to be number one in the markets where we serve from a retail perspective, and then have a very efficient supply chain that is producing consumer products with great brands coming through that will also partner with third parties. But we want to be number one, to be clear. We want to be number one in Colorado. We're moving to New Mexico. We want to be number one. I think you got to be number one at something. I think that's a great strategy. And we hopefully know what good looks like, what retail good looks like. So we're taking care of shoppers, and we're going to be really focused. So we're focusing our capital, our strategy's focused on it, our people are focused on it. And that's very different than taking a position, getting 1 or 2 stores or a brand in a bunch of different states, because you have to feed the capital. So we're very focused from a capital perspective. Our board's very focused on it. Our management team's focused on it. And I think really there is a tight correlation when you go back, if you're a student of business, which you are, when you look at relative market share and returns, and the ability for that business to survive and thrive over time. So we really believe in continuing to grow market share, continue to get the trust of the consumer, and bringing great brands to bear and having them support us. So it's very different than a spread out strategy where we try to check the box and that may work for other people. This is our strategy.
Right. And obviously, you've a lot of learnings from the Albertson experience that you had there. So, okay, Colorado, New Mexico, you got to consolidate, observe, whether or not it's working or not, and then work out where to go next. So can we expect to see, and if so, what timeframe can we expect to see additional finance raisings like this? Because in a nascent industry like this, and certainly a very fragmented industry like this, when I'm looking at some of the players in here, you've got to move quickly and assuredly in equal measure, and that's not as easy as it sounds.
No, that's we are fortunate, and we've had a number of large institutional investors really support our strategy, who came into this convertible debt deal that we've done. So we broadened the debt holder base, as well as obviously it's convertible, so it could go into equity as well. So we're excited about that. I think these number of these firms have deep funds and are prepared to, as long as we continue to win and generate good returns and continue to do what we're doing and making smart deals and creating value. I think we're going to be able to partner with them and partner with other folks to attract capital in the future. Now, the second part of your question was around strategy. We will continue to focus on Colorado, New Mexico, and the first job one is continue to get these businesses very, very efficient to compete within the state, as well as continuing to broaden our base there with retail assets, with products, with efficient supply chains, as well as cannabis cultivation locations. So I guess what I'm telling folks is we're going to go deep in Colorado and New Mexico, and that's really the next chapter. Now, picking another state down the road, that's not on the map today.
So if I look at the way that you raise the money, okay, structured finance, like a convertible note, you've raised nearest down at 100% of your market cap, right? That's unusual on a convert. Well, certainly is here in Europe. What were you telling them? What were they buying into?
It's unusual in the U.S. too. A lot of folks told us we couldn't do it.
How'd you do it?
We have a good strategy. We've got a very talented management team that I think investors get comfortable with quickly across the board. And then we have some outstanding advisors who are working with us. So we use Perella Weinberg as well as Benchmark, who did a great job going out and really turning over every rock and getting us in front of people that are sophisticated, that understand what a good company looks like and why they need capital, and that they're going to be good stewards of capital. So that's how we did it. Took us a little bit, but we're really proud of what we did, and the team did a great job.
Yeah, you should be. Phenomenal, actually. And then how much are you putting that down to history, reputation? Albertson must have played a big part in that, so that there's some value to that history for you, certainly in this transaction, it seems. Can we just in terms of, again, just that kind of careful expansion, Colorado, New Mexico. So are we going to be seeing more accretive acquisitions? I know you've got a little bit of money, gives you a little bit of leeway, but no big ticket items there. So how will you deploy the rest of that capital to see this accretive growth, organic growth over the next, say, 2022?
Our great question. Our investors are going to see us continue to be disciplined in the multiples that we pay for acquisitions. They've got to obviously be accretive. We need to see an opportunity to make them better, whether it be share best practices from them to us or us to them, as well as have cost synergies and people synergies and things like that, meaning we can deploy people and get more growth out of it. So we're going to continue to stay disciplined, buying businesses for a good multiple, should be a multiple far less than where we're trading at, and the opportunity to improve those assets, which even brings the multiple of EBITDA down lower, which creates more shareholder value. And I think one day in the not so distant future, as we continue to tell our story, as we continue to perform as we've said we have, and we've done that over the last 2 years, I think we're starting to get noticed. People are saying, hey, these guys are doing what they said they're going to do. They're sticking to strategy. It's a cogent strategy. Go deep, do a great job. And I think, we're going to continue to be we'll be open for capital for future things, but specifically, we will continue to buy smaller acquisitions. You'll see us buying retail stores in the future. Here with some of this excess capital, we'll invest in brands, and we may pick up a little bit more cultivation as well.
Okay, and just a final word on politics. Is the narrative changing, and do companies of your nature, slightly more professional, slightly more institutional approach to things, does that help with that narrative, do you think?
Oh, I think so. We spent, Dan Pabon, who's our general counsel, head of government affairs, and I were in Washington, D.C. a few weeks back, spending time with a number of senators and Congress members, and really talking about what is cannabis and how much good it can do for PTSD, for sleep. We think it's a viable substitution for some of the opioid addiction issues in this country. And, there's no physical addiction. So this is one that we think we're on the right side of the argument here. And we think it's a good thing for consumers. And, I think the genie's out of the bottle. So I think from a political standpoint right now, we're awaiting, getting safe banking. We'll see when that happens. I still remain optimistic it will happen in the not so distant future, which will allow employees to get mortgages, will allow employees to have 401ks, which I think are really important. This is a big industry. We employ a lot of good people. They deserve to have that, and we deserve to have safe banking and not have to deal with so much cash, which I think is naturally dangerous. And the politicians, there's a number of them that want to do the right thing, but at the end of the day, they got to do the war with their folks across the aisle, and there's a lot of trading going on. And I don't pretend to understand all of that. All I understand is here are the economics. Here's really the good that we can do for people. Here's how many jobs we create. Here's the tax revenue we can generate, which I think helps with education, helps with governance and enforcement to make sure we don't have drugs or alcohol or cannabis get in the hands of minors until they're prepared to do that or deal with as an adult. So I think those things are all important. So we continue to wage the battle and continue to tell our story. And I would tell you, Republicans are becoming much, much warmer to our story. If you look at it, I think there's a 70% of U.S. citizens are in favor of legalized cannabis. So that's, at the end of the day, the people are going to get what they want.
They usually do. Justin, I appreciate you coming on before the end of the year. I know you've got a flight to catch. One of our favorite stories of 2021. Hope it continues to be the case in 2022. Thank you for your time.
Glad to be with you. Thank you.